Hello and welcome to this video. In this video, we're going to talk about how to deal with deductions that's happened on your sales invoices. Now, this won't happen all the time, but if you've sent a sales invoice out for an amount and you've received less than that because a deduction's been made, how do you account for it? And we've got to be really careful here because there's different scenarios as to why you would have had that deduction in the first place, and those different scenarios decide on how we're going to treat it. So, sit back, relax, and let's figure out exactly how to make sure that we can keep your sales invoices and sales area as clean and tidy as possible within QuickBooks Online. Hello, my name is Aaron Patrick. I am a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks chap on the internet, head of accounts at Boffix, and also your friendly podcaster who goes live 8:30 a.m. every single Monday morning for Ask the Accountant, a podcast service designed just for you. Now, today's video is really interesting. We are going to look at how you can make sure that when you send an invoice out but receive less than that, how do we account for it? Now, first of all, let's think of some of those scenarios. The first one's really simple. Actually, it's when maybe they're only making a part payment to you because you've not actually completed the full service. And this can be quite common. Maybe it's a renovation job, for example, and you're able to complete majority of the renovation, but one part of the project just wasn't ever going to be completed. Either you didn't receive the supplies in time or you ran out of time, whatever it's going to be, you're not going to receive it. In that scenario, then we've got to be a little bit more careful about what's happened because we need to reduce the income that's received. So let me show you exactly what I mean. Okay, so I'm in my QuickBooks area. Now, if I go to my sales and I go to my banking area, you will notice I've received £150 in here, just there. Now, imagine that actually my invoice was for £200, but we've agreed with the customer that it's only going to be £150. How do I deal with it? Well, first of all, let's raise that first invoice. £200 on the 20th of April, 200. And let's just say it was for some repairs. £200. Just to keep it easy on myself, I'm going to put inclusive of VAT. Now remember, in the scenario, we've only received 150. And that's because we've actually talked to the client and we know that there's a reduction in that service. What do? Well, we should really be issuing them a credit note. And a credit note is basically the opposite of a sales invoice. So if I jump into a credit note, I can choose my customer. And let's say it's a few days on now. In this scenario, what I really want to do is put back to the same place that I was already putting the figures into, make it inclusive to keep it nice and easy, and put the amount that you're crediting. So in this point then, amount to refund is 50 quid. Let's save and close that one, or I can even send it to the client if I want to. Now notice, I've received on the 28th of April 2023 that amount. Now the cleanest thing for me to do is go back to my customers, go to Apple Core, and explain that I've received the payment for that £200. We've seen it already, yeah? Now, what I'm able to do now is make sure the invoice that I'm interested in, the £200 one, has had all of the amount received, so that goes down to 0. And then I'm going to make sure my credit note for £50 is also applied. This means then I've got £150 coming through. Let's make sure I put it to the right bank account, and let's make sure I put it to the right date. And now if I press save and close, that invoice has been marked off as paid and applied that £50 ready to go. Now what I need to do is just jump to the banking area, and from the banking area, it's already coming up with a match. I've got to be careful in this instance because I've got two different payments coming through. So I've got to choose the right £150 and match it accordingly, keeping it dead straightforward. So in this scenario, we're using credit note to reduce the amount of income that we've had. But what about if the amount of income we've had is correct, but the customer has applied some sort of deduction against it that we need to account for? Now, there's various reasons for this. It could be retention in the building scheme, or if you're caught up in IR35 scheme, then there is a potential that they are going to deduct the tax directly at source and pay it to HMRC on your behalf. Now, in those sort of scenarios there, The crucial element to this one that's different to that first scenario is we don't want to reduce the income. The income's set. In this particular scenario, we're going to say that there's a £260 invoice, but there's a £10 deduction. And we're going to call it IR35 for this purpose. So that means that they are only going to pay us £250 in this scenario. And if you look at what we've got £250 being paid in. So they've done their end of the bargain. And what they should have done is taken that £10 and they should have gone and paid that to HMRC on our behalf. And when we do our tax return, we can account for that accordingly. How do we account for that? Well, we're going to use the same method as before, using a credit note. But the key part of this is that we don't want that credit note to go back to the sales and income. Because if it did that, we would be showing incorrectly how much income that we've had. In this scenario, we always want to show £260 worth of income. So the deduction or credit note that we create in this instance, we want to be making sure doesn't hit the income at all. What we're going to do is stick it into a control account. First of all, let's create that control account so we know exactly what we're talking about. Well, I'm going to go down to the accounting area and chart accounts. Now, this is a demo account. It's got loads and loads and loads of control accounts already. But let's create a new one. Top right hand corner, I'm going to press new. I would recommend leaving it as a cash and bank in hand, and detail type, you can just leave it as cash on hand. Because the most important thing is this name just here. And with this name, I'm going to call it deductions control, or tax deducted, or whatever you want to call it, so that you understand that everything that hits that account is money that's been held on your behalf. And then you can deal with it however you need to deal with it. Or if you've got an accountant, they can just deal with it accordingly as well. So if I save and close that one, I now have a brand new control account called deductions control. Now the reason I would recommend doing it as a cash account is as follows. If I go back to my dashboard, look at my business overview, and look at my bank accounts just here, you'll notice that I do have a lot of control accounts in this demo company, but most importantly, I have a deductions control account sat here at 0. Now in your scenario, you're probably only going to have a handful of accounts within this area. So at any point you can see that, click into it and see any transactions that relate to it, giving you more control over it. If we were just going to put it to anywhere within the balance sheet, as we call it, it can be quite difficult to find those transactions again. Putting it as a cash account means you're always going to see it and you can deal with it accordingly. So next section is to make sure that we set up a products and services account so we can deal with this. Now this is really crucial. If I was to press a new button, and from a new button I was going to click service, I want to call this deductions. Again, call this what it actually relates to. In my case, I just want a complete deductions control account. Crucially though, we need to make sure down here we get this bit right. So first and foremost, the income account, well, we don't want it to be any of the income accounts, because if we do, it's going to reduce that overall sales. What we need from this is that deductions control account. That means if we choose the service that I've called deductions in this case, but you've called whatever it relates to, every time I use that product and service, I know that it's going to safely go to that control account called deductions control in my place. Now, I can also select the VAT, and in most instances, this is going to have no VAT consequence whatsoever, because realistically, this is a transfer. I can save and close, and I'm ready to use that new product and service. Now you've got two ways of doing this. One option is doing exactly what we've already done today. So I go to sales, I find the customer, and I jump into Apple Core. From here, I create a new credit note, make sure the date's correct, but crucially on my products and services, I want to use that deductions account. I can say how much the deduction is, VAT is not applicable on this one, and save and close. That way, I can then do exactly the same. Receive payment, ensure it's going through, £250, making sure it's going to the right deposit and the right date, and save and close. The other option, if I wanted to, was to go into the original sales invoice, edit the invoice, and make sure that when you've done that transaction, you put in the deductions line and put negative the amount that it would be. Personally, I prefer the credit note option, but there is a few more steps for you to complete to get that right. Finally, doesn't matter which way around I've done this, I can jump back into my banking area, find the transaction, make sure QuickBooks is matching the right transaction, and match accordingly. Job done. If you're in a scenario where you've already matched the transaction and you've actually been left with some money still outstanding on your debtors figure, then it's pretty much the same process all the way up to adding the credit note. You've just got one more job to do. And that's jumping into a customer using the receive payment option. And as long as you've already got that credit note there, then what will happen is you'll have the option to actually apply that credit note to that invoice, meaning that invoice is going to go from X amount being due to 0. And there we have it, your way to make sure you're on top of that sales area. Ultimately, you just need to be very clear what the reason is for you not having received the full amount of money. And in both scenarios, you're going to issue a credit note to either reduce the amount of income or transfer some of that income to a deductions control account. Both scenarios, you just need to be making sure that you then allocate that credit note accordingly. Hopefully that's helped. If it has, please do drop a like and comment and everything else to make sure this video goes to the people who need to see it. And if you need to see anything more to do with QuickBooks, don't forget that little subscription button as well. My name's been Alan Patrick. This video has been an absolute pleasure to do for you. I'm sure I'll see you in the next video. Bye for now. Just for fun.